Hello and welcome to Stock Market Fever. This week there were more ominous words of warning coming from titans of industry, warning the world about an impending recession coming our way. Last week, Jamie Dimon, Chairman and Chief Executive Officer of J.P. Morgan Chase, compared the challenges facing the U.S. economy to a hurricane on the horizon and urged the Federal Reserve to act quickly to avoid tipping the world's largest economy into recession. This warning came right on the heels of President Joe Biden and Federal Reserve Chairman Jerome Powell meeting the day before to address inflation, which is near 40-year highs. Underscoring the severity of ill feelings about the economy, according to an internal email seen by Reuters, Tesla CEO Elon Musk informed top managers he had a, quote, very bad feeling about the economy and that the electric car maker needed to eliminate workers by approximately 10%. The email headlined, quote, pause all hiring worldwide, was sent to Tesla executives on Thursday, highlighting an increasingly bleak global economic outlook with prices rising and the Ukraine conflict approaching its 100th day. In this video, we will analyze and evaluate these recession warnings, how the stock market has started to react, and provide our opinion as to the best course of action to protect your wealth and even grow during this coming storm. To begin with, let's be honest. The overall stock market has been god-awful this year. At the beginning of the year, the Dow Jones Industrials opened at just over 36,500, only to slide a mind-boggling 5,000 points to 31,261 on May 19th. But then, sensing that the market may have been oversold and had reached the bottom, stock bargain seekers went value shopping, driving the Dow up over 2,000 points in a span of 2 weeks. However, on the heels of Jamie Dimon's and Elon Musk's warnings, and following an excessively bright employment report, the Dow dropped 348 points on Friday, June 4th. Will this downtrend continue? Will the fear of a recession cause investors to bail out of stocks? And what do we at Stock Market Fever believe you can do to keep your money safe and even grow your money in these tumultuous times? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, here it is. Not investment advice, but absolutely 100% our opinion. And in our opinion, the economy will be heading into a mild recession, led by increasingly high interest rates and quantitative easing as the Fed ratchets up its war against inflation. We believe the Fed has quite a way to go in raising interest rates and to finally cool off the overheated housing market. Even according to fresh forecasts from the Congressional Budget Office, inflation will not reach the Federal Reserve's goal level until the end of 2024. So we believe that there will be pain felt in the housing industry, and that could potentially spill over to the home improvement sector, as the Fed will be raising interest rates another 3% by the end of the year. But we believe that consumers will still be hurt by inflation, which, in spite of the Fed's best efforts, will rage on through at least the rest of 2022 and possibly longer. We do not concur with the Congressional Budget Office that oil prices will go down by the end of 2022. We believe that the price of oil will only climb higher due to a supply constraint that will not improve anytime soon. This is due in part to a significant amount of Russian oil being taken off world markets and a lack of intensified exploration as oil-producing companies prioritize returning profits to shareholders instead of reinvesting. But as individual sectors of the economy contract, we believe that others will grow. We believe that consumer and business demand for tech products is going to remain high, but investors would be wise not to pay ridiculous multiples of earnings as growth rates will be tempered a bit. And we also believe that energy-producing sectors in oil and gas are great. We believe the run-up in oil-producing stocks will continue through the summer and possibly longer. Thus, we have offered our opinion. But what do you think? Where do you think the overall stock market is heading in the short run and long run? And what sectors of stocks would you recommend buying, selling, or holding? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.